My name's David Edelberg. I'm an attorney with Storency Hollenbeck. My practice focuses on bankruptcy law. We represent commercial debtors. We represent landlords, lenders, creditor committees, etc. I'm proud to chair the bankruptcy section for the New Jersey State Bar Association. I'm also a trustee for the New Jersey State Bar Association, and I was also honored to serve as past president for the Bergen County Bar. See if I can move this along. Okay. So, when should a struggling business recognize that it may need to talk to a professional? There may be a bunch of collection lawsuits. There may be a bunch of demand letters. There may be an eviction action. Someone came into my office last week. Has to be a landlord-tenant court March 29th, so we have to prepare for that. But generally, when the owners of the company are working for free for a long period of time, losing money for a couple of years, that's probably a good time for them to consult either an accountant or a bankruptcy lawyer. Excuse me. We invite people to contact us. We talk to people on the phone. We look at a few documents just to size them up without charging, to size up the information. When people come in, I generally want to know, do you have a viable business? Kind of like an oncologist, sizing up, is this a case we can treat and have good success or have a good chance for success? Or is this a business that, it's lost too many good customers and it's just not going to make it? Another question we look into is there a possibility of finding a buyer? Can we file a case for a company, preserve its going concern value, and find someone to buy the asset in Chapter 11? Sometimes it's a hopeless case and we talk about the best way to close the door. Lock the door, hand the keys over to the landlord, and go on to your next chapter in life. We also generally will talk to the owner of the company and try to assess what is their personal exposure. Did they guarantee the lease? Did they guarantee the bank? Are there sales taxes or payroll taxes that are outstanding? Sales taxes and payroll taxes are personal to the owner of a company. And owners of the company are always interested in what their own personal exposure is. There are some downsides to filing bankruptcy. I'll get into them in a little later. From a creditor perspective, some of you may have been sued by a bankruptcy trustee trying to recover a preferential payment or fraudulent transfer. Some of you may have gotten a bankruptcy filing notice regarding a company that owes your company money. And sometimes you have a company that owes you money and find out a month later that they've sold the business, but they haven't paid you. Those are, again, situations where you might just want to make a free call. We do encourage people to contact us, and we try to size up the situation in a few phone calls and review a few documents without charging the person, because until you understand the situation, you can't really determine whether the juice is worth the squeeze, right? You don't want to pay a lawyer unless there's going to be some reasonable outcome. So, what are the benefits of bankruptcy? Let's see if I can move this along a little bit here. Or not. Okay, we won't move that along. I'll just talk.
You use the arrow on the actual computer?
On the computer? You think that'll work? All right. Well, let me just run through it. So, why would a company even consider filing bankruptcy? Well, one of the main benefits is you get a stay of all collection activity. It's called the automatic stay. So if people are demanding money, suing you, have judgments, and you don't want them to levy on your bank account, having a frozen bank account has a way of shutting a company down, right? You can't meet payroll. So the automatic stay stops all collection activity when you file. So that's an important point. One of the other main benefits of the bankruptcy filing is if a company has had a couple of tough years, and usually something happens. Maybe it was COVID, maybe a major customer filed bankruptcy. It could be a lot of different circumstances. So the company's had a couple of tough years. Maybe they're back to making some money and paying their current bills. But what about the debt? What about the $100,000 in taxes that is built up? What about the $3 million in trade debt that's built up? How do you handle that? If you were to file a bankruptcy today, that $3 million in pre-filing trade debt is stopped. Basically goes on the back burner. You don't have to worry about it. So when all these creditors call you and say, you gotta pay me, you gotta rob Peter to pay me, you can literally tell them, I'm not allowed to pay my pre-filing unsecured trade debt. Okay, it's a great line and it's true. And immediately a company that files Chapter 11 will actually get a bump in their cash flow because of that. We're hybrid, right?
Yeah.
And that's my camera.
Yeah.
Okay, good. Excellent, thank you. Minor point. So when you file, you don't have to pay several $1 million of pre-filing unsecured debt. It really does help you. Eventually, that pre-petition unsecured debt is probably going to go away for about 10 or 15 cents on the dollar, and I'll talk about that in a little more detail. Another really great value of filing Chapter 11 is it preserves the going concern value of your business. When your business shuts down, the inventory you make at 50 cents, the receivables you make at 50 cents, the machinery and equipment even less. The business is normally much more valuable to both the owners of the company, the bank, and the trade creditors if you can keep it operating, protect it with the automatic stay, and stay in business. It also facilitates the ability to sell the business if you should want to do that. And that's another benefit that you often see in a bankruptcy case where the debtor does find a buyer and does sell the business to a buyer. Now, frequently the sale price is a fair sale price for the business, but it's much less than the amount of debt. And by filing bankruptcy, you literally get a court order that authorizes the debtor to convey the business to the buyer, free of all trade claims, free of all bank liens, free of all taxes. So bankruptcy is frequently used to implement the sale. Sales can also be done without a bankruptcy, and usually it's with a more solvent seller, and you just buy the assets, and the sale contract says, we're taking the assets, we're not taking the liabilities. That's the seller's obligation. But if you're dealing with a seller who has collection actions, judgments, large arrears on his trade, many buyers, a smart buyer, frankly, is going to want a bankruptcy court order that protects them and says, you don't have to pay any of the trade debt of the seller, and the creditors of the seller can't pursue you. It's a great comfort order. Last but not least, sometimes you're dealing with a business that has multiple leases. You might have a retail chain that has, as many as several hundred lease locations. You might have a McDonald's franchise that has 15 locations. The ability to do things with leases in bankruptcy is quite significant. Number one, let's say you're a retailer with 15 locations. You actually get to pick and choose which leases you want to keep. So if you've got 7 locations that are making money and you want to keep those locations, you can assume and keep those locations. You can buy some time, 6, 12, 18 months perhaps, to cure any arrears on the leases you want to keep. And so you stay with the good places. What about the 6 locations that are dogs and are losing money and you want to get rid of? You have the ability in bankruptcy court to actually reject those leases, and the obligations that you owe to that landlord of the rejected lease, it becomes a pre-petition unsecured creditor, and you get rid of them for 10 cents on the dollar. So the ability to cut off bad locations that are losing money is very valuable. One other thing that we saw more often about 10, 15 years ago is the ability to actually sell a lease, where if you have a below market lease and for whatever reason you want to sell it, maybe you're closing your operation. If the rental market wants $20 a square foot and your lease is $10 a square foot and you have another 10 years on your lease, that's a valuable asset that can be sold in bankruptcy and generate money for creditors. Now, I know what all of you are thinking. You probably reviewed your leases in the last few weeks, I'm sure, right? And the leases probably said something like, let me guess, if the tenant files bankruptcy, the lease terminates, right? Every lease says that, right? Well, wrong. It doesn't terminate. The bankruptcy code says that doesn't work. Okay, so don't worry about that one. We got you covered when you file Chapter 11. Number 2, you also might have noticed that your lease says you cannot sell or assign it without the landlord's permission. Again, in Chapter 11, that would be wrong. Okay, the bankruptcy code allows you to sell it to a third party, make some money. The third party will have to have a strong enough balance sheet to show that the third party can make the lease payments. So there are some protections for the landlords. It's not like they have no protection, but the landlord cannot stop it just because the lease says you're not allowed to assign it. There was some of you may recall a men's store, clothing store called NBO. Anybody remember NBO? They had about 85 locations, and this goes back to like the 90s. Okay, so now you know how old I am. But NBO was men's sports, where they used to have one on Route 4 in Paramus, if I'm not mistaken. And they had about 85 locations, so they had a lot of leases, right? And they actually, a number of investors bought NBO in order to liquidate it in Chapter 11. So step one was to do going out of business sale for about 6 months. And they brought in a professional. There are professionals who will run a going out of business sale for you and will keep restocking inventory as necessary. The first week it's 20% off, and the third week it's like, 25% off, and it keeps going. And, the big signs, bankruptcy sale, and they did pretty well. And then NBL had a lot of below market leases, and they went out and sold all these below market leases, did very well. The creditors, I represented the creditors committee. The creditors got full payment with interest. Doesn't happen all the time. Okay, I don't want to give you excessive expectations. And the investors made a great profit on the deal. So, little story there. So I talked to you a little bit about, restructuring debt. If you feel that, maybe your company's or struggling company's had a couple of tough years, has built up several $1 million in trade debt, but now they're making enough money to stay current on their current expenses. The $3 or $4 million in trade debt is still sort of a monkey on their back, because they had a shutdown for COVID or whatever happened. Everyone has a different situation. So if the company is now meeting its current expenses, it could be a good candidate for restructuring its debt. And a lot of times they'll have a bank loan, maybe for a few $1 million, and the bank is secured with a lien on the assets, the inventory, the machinery, and the receivables. A lot of times it's kind of good for a bank for a debtor to file Chapter 11, and that sounds very counterintuitive. And why is it good? Because, as I said, if you have $3 or $4 million in trade debt that you suddenly don't have to pay, guess what? The bank has a better shot at getting their monthly payments. Also, if you're able to confirm a plan and get rid of $4 million in debt for $400,000, again, the bank has a debtor that's in a stronger position to make payments. So, oftentimes you'll take, and there's many different bank loans. There's revolvers, there's term notes. Very often you'll be able to restructure it. Maybe if you have some arrears, add that to the principal balance due and restructure it into a new 5 or 7 or even 10-year note. Taxes are priority creditors in Chapter 11. I just confirmed the plan a month ago. We had about $200,000 in sales and payroll taxes. We're going to pay that in 5 years, 20 quarterly payments over 5 years, which is a very favorable repayment term. There is an interest component over the 5-year payout, but it's going to allow this company to survive. And then we already talked about leases, so I'll skip that. And then the company I confirmed about a month ago had $4 million in unsecured trade debt. They're going to get about 12 cents on the dollar over 20 quarters, 5 years. Okay, so this is a business that has gone from $4 million in debt to now $500,000 in unsecured trade debt. So they're saving $3.5 million on the unsecured creditors, who really are the ones who take the biggest hit in a Chapter 11 filing. That being said, it's not unusual for your trade creditors to support you, because what are their options? They can get 0 in a liquidation and lose the customer, or they can get 10 or 15 cents on the dollar and keep selling you and make money on the future sales. So a lot of times a trade creditor, they're obviously upset that you filed, but there is some business sense to them continuing to support you. So wanted to cover that. I noted earlier that you can also sell your business in a Chapter 11, and sometimes if your company just can't make it, sometimes that's a good plan B. Often the owner of the company will get an employment agreement with the buyer, which is always helpful for the owner, correct? And the employment agreement with the principal debtor has to be disclosed. It has to be fair. It has to be a real employment agreement, not one that you continue to get paid even after you become disabled or die, should that happen. But that can be an advantage. But again, Chapter 11 will allow a business to hold off creditors, stop collection activity, continue to operate, maintain its going concern value, and go out and find a buyer. And last year we had a pharmacy that was on life support. It couldn't make it; it was losing money. But we knew Walgreens and CVS were out there, and we knew they wanted to buy it. So we filed a Chapter 11. We protected the business for about, I'm going to say 4 or 5 months while we got a contract with CVS. And we were able to sell it for a price that was about 10 times higher than the liquidation value. All creditors didn't make out well, but several secured creditors did much, much better than they would have otherwise done. So that was good. People come into my office and they're concerned, well, if I file Chapter 11, my customers will drop me, my suppliers will stop selling, and my employees will walk out the door. All fair concerns, all concerns that we tend to address head on. And it's basically talking to your employees, talking to your key customers, and talking to your key suppliers, and telling them something like this. We're operating under the supervision and protection of the Bankruptcy Court. We're continuing to operate in the ordinary course of business. It's business as usual. We're continuing to collect our receivables, make sales. We're going to make our payroll. We're going to continue going forward. That's a very generic canned statement. Sometimes you can say, well, we have to deal with the bank and the court has approved it. If that's the case. Obviously, you're going to tailor that little speech to who you're talking to and what your situation is, but it's important to take that on. What are the downsides of filing Chapter 11? Okay, very important, just like going to a doctor that it tells you what the risks of the surgery are. It's very important for any struggling business to understand what can go wrong. One of the major downsides is you have to deal with someone like me, okay? It can be expensive, in all seriousness. The case I confirmed 30 days ago was very hotly contested, okay? Just like litigation, if you have to do a lot of fighting to get your client over the line and get his plan approved, it costs more money. So the client who saved $3.5 million on his trade debt also had to pay about $300,000, not all to us. He had financial advisors, he had accountants, some of it to us. But it was hotly contested. We literally got it approved over the objection of every creditor. So that's a downside. Transparency. When you file bankruptcy, I tell clients it's like taking off all your clothes in a financial sense. They see your tax returns, they see your bank statements, they see if you repaid loans to the owner in the last year or two. They see if the owner was taking bonuses while the company couldn't pay its creditors. And that's a whole other issue, fiduciary. I'll get into that in a few minutes. Once you file, although the bankruptcy court is protecting you with that automatic stay, they put you in a fishbowl. Creditors who can't sue you and can't collect their money, including the bank, they get to see every month a report of all receipts, all disbursements, your bank statements, your receivables, your payables. They get to see what's going on. Also, if you want to do anything a Chapter 11 debtor can do anything it wants in the ordinary course of its business operation. But what if you want to go out and get a new loan from a bank? What if you want to lease a new location? Those are things you don't do every day in most businesses. For those things, you have to go in and get a court order on notice to creditors. And those creditors who want to participate, and let's be honest, as usual, only a few, they get a say in this, but it's basically the business judgment rule, and if you can justify that this makes sense for the business to borrow this money or get this new lease, you can do that. So that's good. I already talked about the automatic stay being a great benefit. So there. I do want to note that if you're the owner of a small business that can't pay its bills, that is insolvent or near insolvency, you are now a fiduciary to the creditors of your business. Okay? It's a little known, not well known, but it's true. So what does that mean? You have to make decisions for your business that are in the best interest of your business. You can't go take big bonuses while you can't pay your creditors, okay? Because somebody's going to come along and want that money back, and they're gonna have a good claim for that, all right? Repaying yourself loans while, as an insider, while the business can't pay other debts can also be a problem. So once you get to a state where you're having trouble paying bills, you do need some professional guidance so that you don't hurt yourself. You may have heard a little bit about the subchapter 5, the new bankruptcy. It's a subsection of chapter 11, and a lot of what I said applies. There are really three main things to know about subchapter 5. Number one, it's much better for the debtor. The debtor has a much easier time getting the plan approved. Why is that? In a regular chapter 11 case, the debtor needs at least one group of creditors to support him in order for the court to be permitted to approve the plan of reorganization over the objection of other creditors. The court just can't do it unless you have one group of creditors in your corner. In subchapter 5, every creditor can hate your guts, every creditor can be against you, and the court can still approve the plan. And that's what we did 30 days ago in Newark. We had a number of creditors. It wasn't even about money. Sometimes people become, I hate the owner of the company and I'm going to do everything I can to kill him. And that was our situation. So that's a great benefit. Also, in a regular Chapter 11 case, there's a hierarchy of creditors. Secured creditors that have a lien on the assets are highest. You have your priority tax creditors and other priorities. You have your trade creditors. And way down here at the bottom is equity, right? The owner of the company. And the owner of the company in a regular 11 can only keep his equity if he puts in new capital, essentially buys his money back, okay? Not everybody can put in new capital. Not everyone has a rich uncle or resources that they can put into the company. In a subchapter 5 case, there is no requirement that the owners of the company put in new capital in order to keep their equity. So that can be very helpful. A few years ago, I was in a regular Chapter 11. I was representing a business owned by a housewife of New Jersey. Any fans of the Housewives here? Mm-hmm. Okay.
Well, thank you.
That's good. I actually made a short cameo appearance, so I didn't embarrass myself before this group. But anyhow, when we filed the case, she wasn't on the Housewives, by the way. It was a little bit of a stroke of luck that she got this gig during the case, which greatly enhanced her sales and enhanced her income. Vineyard Vines hated her, was a significant creditor. Again, there was no financial reason for them to sit down and cut a business deal, but they were just, sometimes you get a creditor who just wants to knock you out, and that's what Vineyard Vines was in this case. We were able to get the case confirmed over their objections. It was a lot of work, but she ended up having to put in, as I recall, I'm going to say about $100,000. I think it was $25,000 down and then $25,000 a quarter for 3 more quarters. But that would be a regular Chapter 11 case, and honestly, not everybody can do that. So that's a big advantage. There's also situations where a client comes in and you're like, okay, the business is losing money, it's bleeding. There's no buyers out there, and we don't think we can find any buyers, and it's time to just close the door. And go on to your next business venture, right? A lot of people seem to feel that they need a bankruptcy filing in order to close the door in a struggling business. I would say no. In most cases, I would say no. If you had a business that was dying and you wanted to put it into a Chapter 7, it wouldn't really be very helpful for a corporation or an LLC. In fact, it could be a problem. Number one, you've got to pay a lawyer to file a bankruptcy. Number two, you're going to end up with a trustee who's going to be looking, did you repay yourself as the owner of the company loans? Did you take bonuses? You're literally going to go through your underwear in a financial sense and look for claims against the owner or relatives or other insiders. What I often tell people, if your business is not going to make it and there's no prospect for a sale, who better to sell the inventory than you? People in the industry. Who better to collect the receivables than you, as well as the machinery and equipment. We do talk about how you spend that money at that point. Obviously, there are certain debts that are personally guaranteed by the owner. Sales taxes, payroll taxes, and other debts. Maybe a landlord, maybe a bank. And then, of course, the owner has to be careful because he's got that fiduciary duty. His business can't pay its bills, and he's got to act in the best interest of the business. So it's a little bit of a fine line. But Sometimes you're just best off selling it yourself, selling off the assets and collecting the receivables, closing the door, giving the keys to the landlord, and going on to the next venture. Doesn't always have to be a filing. It's a lot like medicine. Sometimes you need surgery, sometimes you just need some anti-inflammatories and physical therapy. So we like to do that. I'm going to wrap up. I don't know if I've, overdid my time or however. I says I'm okay on time.
Perfect.
Chapter 11 is a business tool. A lot of people, for many years it had a negative connotation. Actually, bankruptcy goes back to the Bible. It's in the United States Constitution from 1776. So I obviously have a different view. But sometimes stuff happens to a business. If your major customer files bankruptcy and goes out of business, that's a problem. If a pandemic comes along and shuts your business down for 6 months, that's a problem. All kinds of things are encountered by a business that can otherwise be revived or continued or sold. We do encourage people when they're struggling or when they get a notice that someone owes them money to file bankruptcy, to at least make a phone call. I normally will spend 30 minutes up to an hour in multiple phone calls, reviewing a few documents before I even want someone to come in and pay a consultation fee to just size it up. Sometimes if you're a creditor and someone, you get a notice of a bankruptcy filing, any goods that you delivered in the 20 days prior to the filing is a priority claim, but you have to take action, okay? Also, you may want to file a proof of claim. A lot of times, if a creditor calls me, I may give them a form and tell them to file the claim, or if they want me to help them, I'll do it. Often that's a nominal charge or no charge. You never know what's going to come out of a bankruptcy. I wouldn't guarantee you an NBO situation where you get 100 cents of a dollar, but it's not unusual for a couple of years later to start getting some payments. It's sort of a surprise. So I think that concludes my formal remarks, Michael. I want to again thank everyone coming out to the Meadowlands Chamber. Thank the Meadowlands Chamber for hosting our event. Thanks for coming out.